Hello folks, welcome back to T2SMC Trader. In this video, I'm going to try to finish the weekly forecast, but make sure that before watching this video, you have done your own weekly analysis. If you are my subscriber, don't forget to push the like button. If you are not, then consider subscribing to our channel for learning more. This Forex Factory, I use this on to see the news in coming week. But to be honest, this week I'm not that much interested about the news. The reason is this is the end of the year, so we are going to see the closing of the yearly candle and the opening of the new year candle. If you ever see the lowest probability, this is gonna be that area. So make sure that you are not over leveraging and you are not over trading. If you can find a winning trade, stop over there. Try to come back next day. If you take a losing trade, try to mitigate that by one more trade. 2 times loss, I think it's enough for this time. At the same time, we have some unemployment claims in Thursday. Wednesday is bank holiday. So after the bank holiday, morning session most of the time is very difficult to trade. Then Friday we have some PMI. So I believe that in Friday only we'll see the little better price action. Until Friday, all other days are the low probable area to trade. But we will see how this is going to work. Let's come to here in dollar index. Dollar index. So you can see this is that fair value gap. Last week I told that when market came here and closed just on little above of this low of this weekly fair value gap, I want to see that market will reach until the 50% of that specific fair value gap consequent crossment. Last week market was not volatile that much, so it was like range bound and it stopped over there. It's okay. Now I want to see, can it reach for this consequent crossment by this week, or I want to see that market will reach to this consequent crossment at least for this fair value gap. Then if it can go through this, it's the better opportunity or best case of scenario. Before going higher, it can retrace little bit until this order block here. Market went higher, trade this fair value gap here. This is the first down close candle which has traded the fair value gap. So before expanding higher, market can reach maximum to the open of this down close body close candle. So I'll be careful about this, but my intention is market will reach for this consequent crossment. I would love to go to daily chart. In daily chart, as you can see here, this is that daily fair value gap, which is the entry fair value gap. Market trade until this entry fair value gap, low, high, lower, low. If you see the highest up close body close candle, which is the breaker block here, market trade to that breaker block 1, 2, 3 times, then boom, made a very nice obvious kind of fair value gap, traded almost the 50%, even failed to trade until the 50%. I'm happy to see that. Would love to see it will keep going higher, and same thing like I'm expecting from the weekly chart, I'm gonna expect the same thing here in daily chart as well. Low rejection, I want to see this market will reach until this consequent crossment of this daily bearish fair value gap. So from the daily chart, you can see this is that daily fair value gap. I want to see that market will reach until this daily consequent crossment of that fair value gap. Before reaching over there, market can fall one more time to take that low. It is also acceptable because every single candle is a daily candle. So maybe in Monday, market will take this low. In Tuesday, market will reach over there. In Wednesday, it's the holiday. In Friday, something like that. But my whole intention is to see market will reach for this consequent crossment. If and only if market closed below this fair value gap, then I will start to think about the sell. Otherwise, I'm extremely bullish for dollar index, so I want to see that it will reach for this consequent crossment. Let's go to the 4-hour chart. I'm trying to make it smaller, so let's see if I can do it. make it much more smaller. This high, and that high, all of them are the relatively equal highs, which is a very strong resistance zone. Okay, market fall, take that low, so liquidity has been taken. Market retest this fair value gap. Now can it expand higher, take those highs, and can go through this last fair value gap for this consequent crossment. So my intention to see, can it expand higher now for that consequent crossment. But if it wanted to reach here, it has to break this last fair value gap first. If market started to go higher, and when it will come here to this last fair value gap, I will stop trading until it's not broken, because it is respecting. See this last fair value gap, how beautiful it's respecting. So until it's not broken, when market will come here, what do I mean by that? If market come here until this area, I will be bullish. Then I will wait for some kind of reaction, and then finally when market will break this last parallel gap, I'll start to look for buy again until this constant crossment. Just in this area, I will do nothing. In the meantime, if market doesn't want to go higher, then it can fall for this low, which is from the daily chart. You remember I told that it can take that low first before going higher. So I would start to look for sell if it doesn't want to go over there. But I really don't want to see the falling. Instead, I want to see that it will keep going higher. And this parallel gap, most of the area, region of this parallel gap, will be unfilled. I want to see like this way. So far, it has traded until here. So let me mark this one. This is the 50%, exactly 50% of that fair value gap. I'm convinced high top rejection, constant crossment rejection. I want to see it will keep going higher now. I don't want to see it is going to fall and take that low. Let's go to hourly chart straight away. So from hourly chart, nothing so special. All I can see that this low and this, there is a low. Okay, this low has been taken by another low here. That low. Then market started to react this. I'm really happy to see that from the hourly chart, this high and that high, they're relatively or clean highs. Something like, I'm not going to market, but there's something clean highs. Market fall, take that low. That means liquidity has been taken. I want to see the expand higher now toward that buy side liquidity. Remember that last parallel gap, until it's not broken, I'm not going to think that market is going to reach for here. So my first target is this relatively equal highs. Can it reach for that or not? That is all for dollar index. I want to see some kind of bull run because the price is telling me I'm bullish. So I want to see that it will keep going higher. If it keep going higher, the Nasdaq, I will expect that Nasdaq will keep falling. Okay, so I'm now going to Nasdaq. Before going Nasdaq, I would love to go to Dow Jones and the S&P in short because they are important as well. Just remember what I'm showing you here. This is the weekly chart from Dow, which is YMH2025. You can see after that area, market started to fall. What a bear move. Okay, see the bearishness over here. So the Dow is already bearish and it is falling for something. I'm not interested why it is falling, but it has started to fall. It has already started to fall, right? After the big bull move. This is the first time market left a fair value gap open over here. Bearish fair value gap open over here. This is the first time after the big bull move. So I want to see that it will keep falling, the Dow Jones. When Dow Jones is going to keep falling, S&P still, it's not supporting the Dow Jones, but after that candle, this candle failed to go or there is no fair value gap. See, there is no like no bearish fair value gap. But the good thing is market came until this area and there is a relatively equal lows. This last week candle, market tried to go higher, failed to go higher. Instead going higher, it has traded the highest up close body close candle here. It traded that order block closed there. I want to say it will go little higher first, then it will fall again for this sell side liquidity for Nasdaq. For S&P. So Dow Jones has already provided the sell run. S&P is going to support that sell run because of this sell side liquidity. I'm going to believe like this way. Now let's come here in Nasdaq. Nasdaq is still not bearish because you can see it reached until this area, violated almost every level of this order block. Yeah, weak, but I wanted to see that it will maximum reach until the open of that order block, but it has been violated and went until this area. It's cool, but the problem is it's still respecting this bullish fair value gap, where S&P, that same fair value gap has been broken. Okay, dramatically it has been broken over here. Even you can say it is working as an inverse gap for S&P. And for what is this, Dow, this was that fair value gap around this area. There was a volume balance, actually not the fair value gap, it's a volume balance over here. But look at the fall. So it's showing that I'm bearish. S&P perfectly order block is been respected here. It's been respected almost. It's showing that I'm also bearish. Nasdaq is still bullish, but I want to see that this guy will keep falling. When it will start to fall, I want to see the 50% of that week. If the 50% of that week is broken, then I will start to think about the long-term bearishness. Right now my intention to see that can it break the 50% of that specific week. If it started to go higher, obviously it can go higher because this is the all-time high and market can keep going higher, but though I don't want to see that. In daily chart, here this is the highest up close body close candle. Market has traded this order block. The highest up close body close candle opening is the order block. Market trade until this order block dramatically fall. This is the lowest down close body close candle which has traded this daily fair value gap. The opening I marked it as an order block. Market is between these two order block here, around these two order block. This is also supporting, this is also supporting. Nobody is broken. So I need to see that first of all it is going to break this order block, and then I would love to see the 50% of that week. At the same time, you remember the weekly week 50%. If market would love to fall, then it has to break both weekly 50% and daily 50%. Here this last fair value gap, until it's not broken, I can't think that market is going to fall. Here this low and that low, they are relatively equal lows, and here this relatively equal lows is my intention to see that market will take. But for that market has to break this order block and the last fair value gap. Even if it can break this order block mean threshold at least, then I will start to think that this daily last fair value gap is going to be broken at last it is going to be broken as well. But if market started to go higher and take that high again, see this high, if market take that high again, I'll start to think that all-time high again. I really don't want to see that this high will be taken by another daily candle or something like that. I want to see it will keep falling and it will make a bearish fair value gap over here that will be unfilled. To be honest, I want to see that. From the hourly chart, as you can see here, this is the hourly chart, and market came here. This is that relatively equal lows, this low, and that low. They are the relatively equal lows. Here, this week 50%, that is the week 50%, and this is that daily order block. Okay, don't get confused by this one. This is the daily bullish order block. This is the daily bearish order block. Market came to this concurrent crossment of the 50% of that week. In the meantime, it has made this low and that low relatively equal lows. Now I told that if it come here and if it is not broken, then there can be a retracement. Okay, this is retracement, not reversal. I'm not expecting reversal. I was expecting some kind of retracement. This retracement here is the entry fair value gap, where I love to see that market will reach at least until the 50% of this entry fair value gap, and it will not going to touch the 50, this last fair value gap from the hourly chart. The same thing here, market went higher and traded that last fair value gap from the hourly chart, traded the 50% over here, then traded this order block, fall dramatically. That is the unfilled fair value gap over here. I want to see it will be unfilled like that way, and it will trade at least the 50% of this entry fair value gap. Then it will fall and take this low and that low. They are the relatively equal lows. That will be taken, and it will fully close this bullish fair value gap. Fully close. Okay, not even one tick will be open over here. I want to see it will be fully closed over here, that entry fair value gap from the hourly chart now, because I'm expecting the fall. At the same time, if it come back again and take that high, I will start to think about that all-time high. From 15-minute chart, this is that. Let me actually go to the regular trading hour. This is the regular trading hour. You can see this is the opening gap. I have already gave you the screenshot in our Discord, and I told you how to actually look for this liquidity or same things. You can see over here, this is that opening gap. What was that day? It was Friday opening gap. Market never trade this opening gap. This was the Thursday opening gap, where I already got the sell side move. So there is the sell side move. Market fully closed this opening gap. So sell side delivery has been published over there, but still I need the buy side delivery in this area. Excuse me. This candle low and that candle high, this is an area where there was no trade, no entry has been placed over there. So finally I got the sell delivery here. Still I need the bull delivery over there. Okay, so some kind of green candle I need to see that will pass through this area, that small area. Okay, I want to see that this to this is an weak, and here is fully efficient because market has provided the sell and buy. Here market has provided sell and buy, everything has been delivered over there. But this small area or the small portion of the area, still there is the buy side inefficiency staying over here. So I need the buy side delivery. So I want to see how it can reach. If it can reach until this opening gap, lower portion of this opening gap before falling, that is the best case of scenario for me. But everything can be changed by the new week opening gap. That means if there is some kind of this type of new week opening gap, okay, there can be. If there is this kind of new week opening gap, then this whole analysis can be changed. But I want to see that it will go first higher and trade this opening gap at least until the low of this opening gap, or until the consequent crossment. Then it will start to fall for this low and that low. They are the relatively equal lows. So what can happen in Monday? Market can extremely bullish, and until this area it can be bullish, or in Monday it can be accumulating the price around this area. Then Tuesday manipulation, Wednesday is off day or the holiday. Then Thursday or Friday, by using that unemployment claims and PMI, market can start to fall for this low and that low, which are the relatively equal lows or my sell side liquidity. If and only if market take that high, I'll start to think that market is going for that all-time high. Before going for that all-time high, I will observe this last parabolic from 15-minute chart. If it is broken, then I'll start to think that market is going for that all-time high. I don't want to see that. I want to see this opening gap. Majority of this gap will be unfilled, and then market will fall again, and for this sells liquidity. I want to repeat one more time. This week is the lowest probable time to trade because the yearly candle close and the yearly candle open. So don't rush, don't overtrade, don't over leverage. Keep patience until the February first week. Then I hope that we'll see the best price action ever. So until then, make sure that you are not over trading and over leveraging. You are not rushing. Thank you guys for watching this video. If you have made until this area, just write a comment and write on boom, okay, so that I can see that how many people has watched until the end. I need to observe my viewers who are actually serious about this and who are not. So if you made until this area, make sure that you have written boom in the comment so that I can understand you are the guy who has finished the whole analysis video. And please don't forget to push the like button and subscribe to our channel. Until the next time, cheers guys.